Hey YouTube, this is the Robinhood Investor. Hope you had a great day of trading. As always, I really appreciate your support. So if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. Today I'm going to review a portfolio that was submitted to me by a fellow YouTuber. If you're interested in having your portfolio featured on my channel, send me screenshots or videos of your portfolio on Instagram at Robinhood Investor or email them to me at robinhoodinvestor2@gmail.com. So the portfolio I'm reviewing today is from a fellow YouTuber. His channel is Investing Education, so check out his channel. So his portfolio value is actually pretty sizable. Um, in stocks, it's $145,940, and he also has some cash position and some in index funds. So looking at the first stock, Amazon, which is a e-commerce company. His allocation to Amazon is 19.82, which is actually very big position. Personally, for me, I don't have a single position that's greater than 5%, especially in stocks. Unless it's an ETF, then I'm okay with having a greater, more sizable position. But 19% is actually very risky. Thankfully, he has a 38.1% gain, so it seems like he's been holding this position for a very long time. But I think in the long term, Amazon's a really good long-term hold. Next is Facebook, which is his second largest holding, has 15.23%. This is actually very risky again, so about 34%, 35% of the portfolio is in tech. Or at least first two positions is in tech. And he's up 13.09%, which is very good. So it sounds like he's been holding Facebook for quite a long time. Next is Alphabet, parent company of Google. This one, he's up almost 20%, and this makes up 11.7% of our portfolio. I would say the first three positions, it's very similar to my portfolio where I allocate towards Amazon, Facebook, Google, just because they're the dominant players in their respective industries, e-commerce, as well as Facebook, advertising. In terms of online advertising, it's a duopoly between Facebook and Alphabet, so I think it's good long-term hold, especially when they're leaders in the company in the industry. Next is Visa. I think Visa is the leader in the payment processing industry, and as consumers continue to spend more money, Visa benefits from every transaction, and this makes up 8.66% of his portfolio. Visa has been like a really strong growth stock, and it seems like this investor held for quite some time is up 61.08%. So good job on those gains. Next is Booking Holdings, which is in the online travel business. I personally don't have stake in this company, but I know it's been doing very well, especially in a more cyclical market. This is a consumer. It's not. It does well when the market does well, but in a recession, since less people are going to travel, then it won't do well. But it's been doing well recently. This makes up 7.74% of his portfolio. Next is Alibaba. I also have exposure to Alibaba as well. It's a good long-term hold and is dominant in the Chinese market. Up 10% and makes up 5.74% of the portfolio. Next is MasterCard. Similar to my thoughts on Visa, the payment processing solution industry is booming, and as more and more users continue to go cashless, these two companies benefit. Up 30.7% in the portfolio and makes up 4.43% in the portfolio. Next is Google, aka Alphabet. This is Class A share, so it has voting rights. Up 8.55% in the portfolio and makes up 3.91% of the portfolio. So based on these top holdings, I think it's a very good, stable. Well, it's a very solid growth portfolio and good long-term holds. Next is Intuitive Surgical. So this is in the surgical systems and instruments business. It's funny, I was actually considering buying Intuitive Surgical about 2 years ago, but I never opened a position. This is up 7.26% and makes up 3.36% of the portfolio. Next is Boeing, which is the leader in aerospace defense industry, is up 6.19% and makes up 2.15% of the portfolio. Next is Costco, which is in the membership warehousing industry. I think this one's a solid dividend growth stock. Makes up 1.93% of portfolio. And this investor has held it for a very long time, almost up 80%. Next is Nike. Up almost 60% and makes up 1.66% of the portfolio. Nike is similar to the travel business. It's I feel like it does well when the market is doing well, but when there's a recession, Nike doesn't do as well just because retail in general doesn't do as well. Next is Apple. Ever since the announcement of the new products, it's been surging and doing very well. Up 24.73% in the portfolio and makes up 1.64% of the portfolio. Next is Comcast, Class A shares. Up 28.06% in the portfolio and makes up 1.34%. So Comcast, personally for me, I'd rather hold Disney, but Comcast is runner-up, and I feel like is better hold than the Netflix. Expedia, which is in the online travel industry, again, similar to Booking. It does well in a good market. This is up 5.4% in the portfolio and makes up 1.28%. Welltower, this is a REIT, real estate investment trust, especially in the healthcare sector. This is up 48.59% and has actually a very good dividend yield. Makes up 1.06% of the portfolio. S&P Global, this provides market data, and it's up 47.98% and makes up 1.02% of the portfolio. Disney, like I mentioned, I like Disney more than Comcast, so if I manage this portfolio, I'll probably have a larger holding in Disney than Comcast. And I'm actually looking forward to the streaming service they're providing in November, so hopefully that'll increase the value of the stock. Up 39.36% and makes up 0.9% of the portfolio. JD, which is the eBay of China. This is up 21.4% in the portfolio and makes up 0.8%. I think JD is a good long-term hold. FedEx, which is provides provides transportation business services, up 3.87%. It makes up 0.73% of the portfolio. I personally don't hold FedEx or UPS in my portfolio, but I think it's one of those businesses where as the market doesn't do as well, or if there's a recession, since businesses won't ship as much, as well as consumers won't ship as much, FedEx will be impacted in a bear market. Last stock in the portfolio is Berkshire Hathaway Class B shares. I also have this in my portfolio. This is up 9.37% and makes up 0.67% of the portfolio. So overall, it's a total of $145,940. And this is up 24.08%. Seems like this investor has been holding the stocks for a very long time, which is good. I like the strategy of buying and holding for a long time, and continue adding to the positions when I continue to have cash. And this investor also has the remaining 5% in cash and the S&P 500. So overall, mostly in US equities and a lot of it in the technology sector, which is risky, but I think since this investor seems to like more risky growth stocks, it's good in long term. That's all for this video. I'm looking forward to seeing what's in your portfolio. Remember to use my referral links below, and both of us get $20 for using personal capital or free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. See you in the next video.